supposed to make of this latest quarter from Clorox, which sent its stock tumbling $3.82 or 3.2%? The maker of Glad Bags, Kingsford Charcoal, Hidden Valley Salad Dressing, Fresh Step Kitty Litter, Burt's Bees Personal Care Products, and plain old Clorox Bleach just posted a 6-cent earnings miss off a $1.42 basis, slightly higher than expected revenues, climbed 3.8% year over year, and lower than I would have preferred earnings guidance for 2017. What is going on? Well, within the company, the results pretty wildly varied. Clorox's cleaning products saw 13% volume growth. Household was up 6%. Lifestyle categories up just 1%. Company's international volume grew at a 4% clip. So some of Clorox's business is doing a lot better than others. But I think the real key here is that when you're a consumer packaged goods company with a stock that's trading at 21 times earnings and a 2.77% dividend yield that's too small to protect your shareholders, your stock's going to get punished when you even slightly lower a forecast or even talk about price competition if you think that the Fed is on the verge of raising interest rates. So is this merely a temporary blip, or do we need to start worrying about the future? Let's check in with Benno Dorer, the chairman and CEO of Clorox, find out more about the quarter and the company's prospects. Mr. Dorer, welcome back to Mad Money.
It's good to be back, Jim.
All right, Benno, I'm trying to figure out the narrative. As you know, I like the narrative of conference calls. I'm trying to figure out whether you guys were more downbeat than the analysts. I heard a lot about price inflation of commodities. I heard a lot about competition. I heard a lot about not wanting to lose share. I did not hear enough about the great growth areas that I think are really sustaining the company in a period where a lot of other companies, frankly, aren't doing as well as yours. So I'm giving you a chance to change the narrative on air.
Thanks for that opportunity, Jim. Indeed, the highlight of this quarter was the very strong top-line growth that we've seen. We have a lot of growth in an environment where growth is so hard to come by. We've shown 8% volume growth. We've shown 4% sales growth, 6% currency neutral, on top of a strong year-ago 3% sales growth. And we've been able to convert that sales growth into 3% earnings growth on top of a very strong 20% earnings growth last year. I feel good about the business. We're one quarter into this fiscal year. We have a lot of momentum on the business, and we're staying the course.
Now, there was indeed some companies that seemed to almost make a suicide pact with each other, and you admit that it happened. In other words, there's price competition, but it didn't grow volumes. Why do companies, just maybe give me an economics 101 or a business management class, why do companies cut price if they can't grow volumes? What's the point?
We have seen competitive price promotions in certain categories. For instance, our Glad trash bag business is one of those. And we're seeing that because commodities have been somewhat favorable, and then what companies tend to do is recover lost market shares by reinvesting into trade promotions. We are not afraid to defend our business if that makes sense, and we have done some of that on Glad trash bags. But we really take a long-term view, and we try to focus on being balanced and growing our business the right way. And growing our business the right way, for us, means to invest in our brand equities and to invest in our innovations. And we're in the very fortunate position to have a lot of innovation in an environment that's really innovation-starved, and that's working well for us. Over time, we think that this price promotion will subside because commodities are expected to firm up over time, and we think that the business, from a competitive point of view, is going to return to be more rational in the midterm.
All right. Now, there was a moment, Steve Robb, your CFO, he's a straightforward numbers guy, and he's asked point blank about Renew Life. Now, I happen to be a big user of Ultimate Flora. I just think that everybody is going to. And by the way, the CEO of DuPont agrees with me, and he makes probiotics for everybody. He thinks it's his greatest growth category. But on your conference call, Steve Powers says basically that he does not think that Renew Life is going to move the needle for your company. If you put a lot of money behind Renew Life and we all start taking it every day and start hearing about it, why would I not think that in 2 years it wouldn't be a huge needle mover?
It will be a needle mover. What Steve Robb, who indeed is a numbers guy, and it's good to see that he is, what he said is that it has delivered 2% of volume and sales growth for us this quarter, but you know, it is certainly on the smaller side. Still, it's about $100 million in revenue, and for a $6 billion company, that is not yet as material today as it will be tomorrow. So we love this category. We made this acquisition of Renew Life in May. It's in a category that's very profitable, that's growing double digits. and where our capabilities, in particular in the marketing, innovation, and distribution building side, really play quite well. It's doing exactly what we hoped it would do for us. It's growing nicely. The integration is well on track. And we're starting to expand distribution. So watch this space on Renew Life. This is a business that will do very well for us over time.
Okay, how about your spend? I mean, you talk a lot. Facebook reported tonight. It looks like they're still getting a lot of advertising spending. You kind of break down where you are doing some spend. It looks like you're still getting some good results from online for some of your products.
We're getting very good results online, which is why we have, over time, moved our investments into digital and social. This area now accounts for more than 40% of our working media spend, which I believe is at the leading level in our industry. And we continue to shift investments into this space because we're seeing the ROIs follow. We get very strong returns because digital and social allows us to give the right message to the right consumer at the right time and really engage consumers in two-way conversations. So we feel good about communicating in digital and social, and I expect for us to continue to shift investments into this arena over time.
All right, let me see, Benno. I was surprised that Lifestyle only gained 1% on a volume basis. To me, it's one of the most exciting parts of your company. Is there anything short-term that could make that so that depressed it so that I could think a year or two from now you could get better volume growth there?
This is really a matter of year-ago comps. Okay. As you noted, Jim, a lot of our growth businesses are in the lifestyle segment, and this is a segment that's done very well for us recently, and we expect that to continue in the future.
All right. And then international, international, I'm still waiting for you guys to really turn on the jets. It looks like your products are like more international than U.S., or there's less price competition. Put in incremental dollars overseas?
Well, in international, we continue to face the macroeconomic challenges that everybody in our industry faces, and that has a lot to do with exchange rates and with cost inflation. I'm actually quite pleased with the 4% volume growth that we've seen, 10% currency-neutral sales growth, and we are focused on stemming these headwinds that are talked about through pricing, cost savings, going lean, and we're doing that very well. But we're also starting to invest in growth opportunities. Renew Life did extremely well in Canada last quarter. Burt's Bees in Asia is a tremendous growth opportunity for us, and it grew more than 60% last quarter. So I feel very bullish about the international business long-term based on the strength of our brands.
All right. Thank you so much to Benno Dorer, CEO of Clorox. Great to see you, sir. Thank you.
Good to see you, Jim. Thank you.
Yep. This was a good quarter, but these stocks are out of favor right now. One day they will be back in favor, and you will want to own Clorox. Benno Dorer, Clorox CLX. Stay with Mad Money. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.